One would definitely like to know about the kind of valuations you're seeing in the private market right now.
Well documented, but I think we're seeing very aggressive valuations in the market, and that amazingly hasn't changed even given what's happening in the public market side. So I think that arbitrage is unfortunately it's widening. The gap is widening between public and private values. So we personally are starting to spend a lot more time on public securities and thinking about what a public strategy is there. And if we can build interesting, meaningful relationships with public companies, it might mirror a private strategy. So yeah, private valuations are high, and I think that hasn't changed, and probably a function of how much capital is sitting out there.
Mm-hmm. Does that mean that we see tea associates doing more of PIPE transactions in the near future?
I think so. The challenge of the public market in India is it's so volatile, and these things spring back and forth, so quickly on you that we'll see. We'll see if this opportunity lasts long enough to make some interesting investments happen. But yeah, I think we're working on a few now, and it's certainly part of the strategy for us. We're very open to doing PIPE transactions.
Okay, when you say PIPE transaction, does that mean that doing a classical private equity deals, like just picking up stakes in the open market and doing some stuff like that?
Yeah. No, I think being straight common outside investors is less interesting to us. We may still be buying common stock in a transaction, but we want to invest in companies where we are building a relationship similar to the way we would in a private transaction. This is a company, discussion where you build a real relationship with the entrepreneur. You see eye to eye. There's value on both sides. That is seen in terms of what we could add to his business through our network and our experience investing for 4 years. And I think if that manifests itself in just taking public shares, that's okay. But I think we need that relationship before we're investing. We're not going to go make a complete outside purchase.
So essentially, the strategy for TA associate in India in terms of doing a classic private equity deal, partnering with the company, growing partner-like, or is it like doing a PIPE transaction, or doing perhaps mid-market kind of buyouts? What exactly is the sweet spot?
Sure. Listen, our sweet spot, we call it profitable stage investing. So, these are companies that have already proven a track record. We back great entrepreneurs to continue doing what they've already been doing, and help take things to the next level without, frankly, interfering too much or screwing up their model. What we want to do is come accentuate what they've already been doing. So, I'd say the good news on that is, we are backing folks that have already hit a certain amount of scale, but that can be very late stage opportunity where we're doing a full buyout. We're open to that, or it can be taking a small 10 to 15% minority stake in a company where we are continuing to back them, and frankly, the very next day post doing the deal, nothing has changed for them except they've got a partner on board that's going to help them grow the business. So we do both. The only constraint we have is that we invest in profitable companies. So true startups or true venture-backed ideas, those are tougher for us to do.
In India, your model essentially has been a very mid-market private equity kind of play, not pretty much like that you are, in the Western world perhaps, putting very large check sizes. So in terms of your India strategy going forward, do you mean to do something like that in terms of increasing the ticket size of transactions and doing some of those?
Yeah, we are growth investors. So I'll make the point that we don't make money really on anything other than growth. So we don't take special dividends. We don't make money from really through special ratchets and things of that sort, or through pay down of leverage. That's really not where we typically as a firm have made money for 40 years. We are growth investors, and what that means is, in the US as well, I think we are more mid-market than we are large cap. In India, also the type of growth that we expect from our companies, I think we tend to see more on the mid-cap side. Would we like to write larger checks? Absolutely. Our global average is closer to 150 million of equity. In India, we're writing between 30 and $70 million type checks. We've written one $125 million check in a business in Idea Cellular, which was pre-IPO, but again, a business that demonstrated the kind of growth characteristics that we get excited about. So it really has nothing to do with stage. We would absolutely do late stage companies as long as they deliver the kind of growth that drives the returns that we look for. We promise our investors, 25, 30+% type. So we focus on, companies that are growing that fast.
Absolutely. How important is India as a piece, entire TA associates global strategy?
Yeah.
Is it more of a function of how the developed world is right now, or India has always been important for you?
No, so again, we are growth investors and have been from day one, and so as the pattern in the world is playing itself out, clearly this part of the world is very, very important to deliver growth. And I think TA has transformed itself in the last decade from being a strictly North American firm to today close to 50% of our capital is coming outside the U.S. A colleague of mine and I started our London office, close to a decade ago, and that was our first international office. And we've now moved out here to start this business, and we are chasing growth. And alongside that evolution, we just opened a couple of months ago our Hong Kong office, and we are now going to be a Pan-Asia player, and that includes EMEA and Middle East as well. And so we are, we look at ourselves as being global providers of access to growth, and so India and Asia clearly are becoming a very big part of that strategy.
So how has India experience been till now in terms of valuation, expectations, IRR?
The experience is actually very good in that we've put about $300 million to work in India so far. I think we're investing in great companies. I think the challenge ends up being that it's hard to exhibit the discipline because it's frustrating to sit and do one deal a year or to do one deal every few years. And that's hard, because you run and chase after a lot of things, and there's a lot of great, interesting companies out there, but valuations are high, and so we have to remind ourselves to be disciplined. We feel good that we're investing from a global platform, so we feel less pressure to put a certain amount of money to work every year, and we're not trying to meet any investment quotas. And so we go and invest in companies that hit all the metrics, both on growth but also valuation, wherever we find them in the world. And the good news about India is we are seeing a tremendous amount of deal flow and opportunity. And I think it's just making that fit happen where you get to see eye to eye with an entrepreneur on value, on him, he or she wanting to not just have a partner that delivers capital, but also delivers more than that, and treat the relationship like a partnership. When we find those opportunities, we get excited and we get aggressive.
So how do you maintain the balance between being disciplined and entry valuation and still getting respectable IRR?
It's hard, but our LPs pay us to do one thing, which is to deliver a certain type of return. So if we don't feel like we're going to get that from a certain investment, we don't pull the trigger. We just don't. And thankfully, ours is very long-term capital. We aren't traders. We have never been traders. Our average holding period is a little over 6 years in our companies, and so we have the luxury of waiting. We wait for the great companies, but we really see eye to eye and believe we're going to make the kind of returns we want. And if a year goes by where we're not doing a deal, that's okay. Thankfully, so far, I think we've been fairly active in a short period of time. But the landscape is challenging. There's a lot of capital chasing. These aren't just new firms. These are great, well-established firms, and so entrepreneurs have a lot of options when it comes to capital. We're going to keep waiting for the right one to come down the middle.
In terms of the global comparables, having the shop in India in terms of Blackstone or Carlyle or KKR, how is it different?
Yeah, listen, they're all great firms, and I think what we share with them is a long legacy of investing globally. And so, I think an entrepreneur that chooses to work with any of the four of us that you just mentioned, receives access to a real global network, and so in that way we're all very similar. I think we're all just taking different approaches. I think some of these firms are starting to get very focused on larger deals and making that a real emphasis, and they're also, like you said, working on maybe different capital structures with NBFCs and things. We are sticking to what we do, what we've always done, we're not. I think there's enough in the opportunity landscape that it's not a competitive scenario where it's either one of us that does a deal. There's enough to go around, and I think we're just trying to stick to our knitting and do what we do, which is we're looking for growth opportunities.
Not necessarily buyouts.
Not necessarily buyouts. That's okay. And globally, 60% of our investments are minority deals, 40% are buyouts, and so. We're happy to wait for, if it's an opportunity to buy it, we're open to that, but if it's not, that's okay.
Interesting. In the private equity portfolio, there are some companies which often, outperform the expectations, some not necessarily do so well. Yeah. So that's what your LPs or TS or sales. Which of those companies you think have not necessarily done so well as you imagine them to be, or not really coming along so well?
In our portfolio? I gotta say, thankfully, we don't have a lot of bad history to speak of, and it's more a function of just being early, or just being recent to the landscape than it is anything else. I think we've made 5 investments so far. We've exited 2 of them, and those have both been very good returns for us. And the other 3 are all great companies that are continuing to execute and do well. So knock on wood, we haven't had something really painful to speak of just yet, but it's these things have long cycles, and so who knows how things play out. But so far, we've been very happy with the performance of our companies. And I think we've built real partnerships with our companies, and we're trying to work closely with them to make sure that they can continue to see great growth.
So have you completely exited from India? So still holding?
We have completely exited from India.
Okay, how much did you make on that investment?
I don't know if you talk about it, but it was a good return, and again a great company that performed really well. And
what sectors are looking good to you?
Yeah, we're sector agnostic as a fund, and so we're spending a lot of time in healthcare. I think that's a big theme for us. Consumer related end markets are a big theme for us. And I think financial services actually benefit a lot from that consumer theme. So financial services is probably another leg we're spending a lot of time on. We are deep on a couple of business services opportunities now, and so it's pretty broad. We are, and I think actually at our size range, it's very hard to be just a specialist in one area. It helps to be broad and to be able to see ideas from a number of different industries. And
can we expect you doing more platform kind of investing?
Yeah, I think so. I think in certain sectors that we know well globally, and we've got a real track record of investing in, I think we are finding ways to make platform style investments where we back folks to go do a lot more, both domestically and globally. I think we are hoping to continue backing someone like Tega to keep growing as a platform globally into not just the few areas they're in today, but to keep growing the pie of the services and technology they offer the sector that they play in. In India as well, for instance, healthcare we find to be very interesting as a space, and there are a lot of folks that have reached a certain amount of scale today. They've proven the model, but there's a lot to go further and do both organically and inorganically. And we'd love to keep backing them. Dr. Lal's has been a great investment for us so far, and again, they're doing a mix of both things. And so we want to find great entrepreneurs that have proven a track record, and we can now back them to keep doing more of the same. And that's the strategy.
So your blue tickets have been investing in $50 million, right?
No, we've reduced it in India, so we would start about a $35 million type of investment.
Customized it for India, essentially.
Yeah, I think we find that the kinds of businesses that we get most excited about in the stage of life cycle they're in, are often slightly smaller checks. But our average has been closer to 50, and so we're finding check sizes that are larger as well. And we've written a $125 million check, we're an $85 million check, and so we're being fluid with it. And but we are allowing for it to come down if we find a great company that we want to back.
But then there are too many Me Too funds in India, right? Targeting the same space, $30 million, growth investing, backing entrepreneurs, partner, right? The same sectors.
Sure.
And so how are you different? I'm sure all these investors also provide the global platform, right? Somebody's Sequoia, somebody is a Carlyle, somebody's a Blackstone,
sure.
Somebody's a, I'm sure all the funds have a global platform these days. So how do you think that you're different?
Like I said, I think the opportunities far outweigh the number of firms that are here.
You think there should be more PE firms?
No, I definitely don't think that. But I do think that there's enough to go around. Is the point I'm going to make, and I think a lot of us have similar sounding strategies. But I think at the end of the day, it's a people business. I think entrepreneurs look you in the eye, and you understand if you both you have a common shared thesis of where the business is going and what you want it to become. We've made over 400 investments globally and across sectors, and so I think we often find that we've invested in some analog of what we're looking to invest in here, and entrepreneurs recognize that we've built similar businesses in other parts, more mature markets, and hope to carry over a lot of those shared learnings here. I think the other thing is maybe a lot unlike other firms that have had to maybe shift their strategies to fit India. This is all we've ever done for 40 years is do minority investing, or at least minority style investing in profitable growing companies. We are very happy, backing folks and taking a shared role at the table rather than feeling like we own a piece of the table. That's not our DNA. And so this is all we've been doing forever. And so for us, this has been a very comfortable shift to come to India. And I think if you think India's competitive, the rest of the world's competitive too. Think about how many mid-market firms are in the U.S. That's a very competitive market. So for now, I think we actually feel very good about where we are. We feel good about our portfolio, and we feel good about the number of opportunities we're seeing. And what we've done is, to respond to that, we've been scaling up our team, not going the other direction. We think there's a lot to do. And so we've gone from 3-person team a year ago to we're up to 8 people now, and we are potentially going to grow from there. So we're bullish. We're really excited about India and the kind of broader opportunity in Asia, frankly.
True, honestly. So in terms of your entire TA Associates portfolio, how has India performed?
Like I said, I think so far so good. We've only exited 2 out of the 5 so far, but it's very early days. The other 3 have been made, within the last 2 years, and as I mentioned, we've got a much longer investment horizon than that. So far early days, but so far so good.
LPs at large are quite disappointed the returns that Indian private equity has kind of generated. In terms of like 10 years now, we've had 2 cycles, and you come a time when we're kind of heading into a slowdown of sorts. So how do, against that kind of backdrop, with LPs disappointment and the way we are in the global economy, what are you making of it?
Yeah. So I think we've come at an interesting time, which is that a lot of the headier, maybe sort of the more fast and loose style of investing has actually really slowed down. We're finding that people, by and large, are very disciplined these days, and we have a lot of respect for the folks that are investing alongside us in India. I think LP unrest and things, I think these things come and go, and I think it's all about quality performance on a long-term basis. I mean, we are now in our 13th series of funds now as a firm, and I think you've seen that when you have a track record that's continued to deliver for a long period of time, your LPs back you through ups and downs, and this is a cyclical business, and you have ups and you have downs. So I think actually we've been having very good and balanced conversations with our LPs. Again, we're a slightly different beast in that we're a global fund. We're one pool of capital that invests across markets. So I think as long as we stay true to what we do, which is we are not looking to hurry up and put capital to work. We're waiting for the diamond in the rough. We're waiting to turn over a lot of rocks to find 1 or 2 great investment ideas every year that we back. I think our LPs are okay with that, and we're seeing that they are they've been relatively patient and happy with what we've been doing.
So why is Indian private equity underperformed, and why is China? It's been like everybody talks about China.
I think it's a cycle thing. I think you're seeing that things peaked so much in 2007 that you are now seeing the results of that investment cycle that we went through, which has been very tough to exit from those kinds of peak levels. But I think the investments that we've made in the last 2 to 3 years, I think are going to be some.
Interesting.
Absolutely, I think there's going to be some very good investments from a lot of firms. I think people are going to do well. So, yeah.
How is it China piece compared to India for TA Associates?
China's very new for us. We are literally 3 months into it. We've got a great team that we've just helped get on board out there, and we're excited. We're excited about the China opportunity, and not just China, frankly, the broader Asia-Pac opportunity. Indonesia, Vietnam, Thailand, Malaysia. So Southeast Asia is very interesting. We think Australia is a very interesting market, and clearly China is a big piece of what's exciting about Asia. So we're very excited about the team we've got there, and
how much more are you looking to invest in India?
As much as we can do. We're big fans. Again, we have no capital allocation restrictions or hard numbers that we need to meet. So it's very fluid, and as much as we can do, we're open to.
Is India the most attractive Asian market for you guys now? Considering you're based out of India?
I mean, for me, myself, yeah. I mean, it takes a vast predominance of my time. But like I said, I think we're seeing some really interesting Asian markets now. Potentially slightly, even less competitive markets, and so we'll see. We'll see how it plays out over the next 5 to 10 years. But I think this is just a long-term business. It's just too hard to pick moments in time and make comments on if this is this the best market or is that. We're just getting going in Asia. We've just made a series of investments here in India, and so we're going to grow, and we'll see how these things play out.
So, Naveen, would you always be a global fund, or you can always be an Asia fund or India fund, raising money around that?
Yeah, I think for now this is a model that works really well for us. Again, we like the idea that we are not feeling like we need to put money just in one market because we have a singular focus as a firm. We like that we're a global fund. We like that we can move the needle to where the opportunities are. It's supposed to be driven by a certain niche mandate. So for now, I think this is what we're comfortable doing.
No, but we have like global firm like a Sequoia or a Blackstone, which have India-specific dedicated funds and people, separate GPs and investment teams.
And those are just different models. Clearly, they've been very successful. So, it's no commentary on other firms and how they're structured, but for us, this is something that's worked, and we've been doing this and operating out of one pool of capital, one broad pool of capital, like I said, for since the late 60s, and so in the U.S. and onwards. So this model has worked well for us, and so we're gonna keep going on this for now. And I think if we feel the need, then that conversation will organically come up. But we've been doing it successfully in Europe for now, almost a decade without having to need a separate pool of capital, and so I think this works well for us.
Mm-hmm. In terms of, you did a very big investment for casual gaming recently in some other part of the world. Do you think such kind of opportunities are there in India as yet in terms of these sectors?
Yeah, listen, I think the DNA in India is changing rapidly from a service to a product, driven DNA, and that's really exciting to us. And I think we're seeing a lot of opportunities on the product side. You're right, we closed a very large investment in a company called Big Point, which is an exciting company in the casual gaming space in Europe. Mm-hmm. And frankly, on behalf of Big Point, even we've been looking at a number of opportunities in India, and it's an exciting market. It's a thriving market. I'd say internet opportunities more broadly are very interesting in India. So again, there's things get heated fast in this town, and so.
What's the viewpoint of e-commerce, Flipkart, and these kind of companies getting $1 billion valuation? Any kind of thoughts on that?
No, I don't. Again, I think these are very thoughtful investors that are going after these investments. So, I think people are making big bets. I mean, if you believe that India can have even a fraction of the type of penetration and maturation that you've seen in the West on these platforms, these are going to be very valuable companies over time. So I think everybody builds their investment models differently and things, but I think there's clearly a big opportunity here. And you're seeing very sophisticated folks, make bets on these companies. So I think there's something there.
The last question, in terms of broader trends you see in the market going forward, private equity market in India, or perhaps Asian private equity.
Again, I think we've seen, and this is already a trend that's playing itself out over the last couple of years, but I think will really, this will be a really great thing for the industry. But I think we're starting to see a lot of discipline from all of our colleagues as well, and I think we're all trying to now say, look, let's wait for the right thing to come along. The good news is the market is growing so fast. There's plenty of opportunities for people to go focus their time on. I think India does have a very interesting public market scene as well, and so I think folks are finding, and you've seen this in the last couple of years, a hybrid strategy to investing in India because of the quasi-private nature of some of these public companies. There's not a lot of float. It's a very one-on-one direct relationship you can build with these companies. I think you're going to continue seeing both in Asia more broadly as well as in India that LPs continue to take this kind of hybrid approach to investing, and I know we're spending a lot of cycles thinking about it as well. And that's very different than what we do in the West. And so, so I think that's kind of the big theme. But again, I've said it before, we're seeing across segments some really, really interesting growth in India.